Greeting viewers. I know that my audio right now isn't too good. I don't really have a mic on me right now, but I still said I wanted to do a market review of today. It was a high resistant liquidity run. So that just basically mean that it was basically hard to really read price action, but mostly in the morning session, in the afternoon it kind of cleared up. But you have to really understand price action to be able to make trades in these type of scenarios. It was a very interesting day. I didn't really get to put in an order per se. I got to put in a setup, but I didn't get to enter because I was on my way to school around the time that this setup came about. I had class at 1 and my entry would have been 1:05, and that time I was in a taxi going to school. So it was a little bit hard. Alright, nonetheless, let's jump into the video. Alright, so as you can see right here, I have two charts of mostly US 500, it stands for the S&P 500, and US 100 stands for the Nasdaq. In the future videos, I'm planning to explain a little bit more about these pairs. What do they mean when they say US 500, and what do they mean when they say US 30 as well as US 100. So if you don't understand right now, don't worry. I'll make sure to do a separate video on that soon. Right? So as we see over on US 500, realize that we had a lot of black candles going down. So these black candles represent mostly sells are bearish candles. The blue candles mostly are bullish candle. So that's my color scheme. I use blue and black. It's really nice on my template. You can use any color that you choose, right? If you're not familiar with this trading view or this platform that I'm using, which is trading view, I can do a video, but you just have to let me know in the comment if you would like to see a video like that, right? So as I was saying, my color scheme is blue and black. So blue signifies my bullish candlesticks, so the one that go up. Let's select this one. Okay. So as I was saying, I was just trying to insert the highlighter function, but I have to press escape. Oh, I have another function in play. Alright, so let me delete that. So as I was saying, the blue candles signify the candles going up, and the black candles signify the candles going down. Right. So if you notice in this price run, we had a lot of black candles going all the way down around from 4:45 to 6:45 a.m. Same for the S&P 500. So roughly 2 hours of just sells. So when you notice that we had this big price move, I think I have the price range in here. The price range, so this is saying 256.4. Read the one to the left, that's the number of pips. So over 250 pips and roughly selling for US 500. Let's see what that was. That was roughly 84. Let me call it 85. Yeah, roughly 85 pips. And if you don't understand the term pips, I'm going to do a separate video on all of that, so don't worry ahead. Okay? Alright. So as I was saying, we had that huge price move, that major sell around 4:45 to 6:45 a.m. Towards the selling. So we couldn't really expect much in that New York morning session. It was going to be a high resistance liquidity run, as Mr. ICT would say. That just basically mean that um you'll be having orders being sent in, but it's going to be a lot of back and forth movement. Price is gonna be going up, price is gonna be going up and down and up and down, back again and up and down and up and down. It's not going to be clear. It's not going to be like an easy thing where they can just look at and say, yeah, I know where price is gonna go. Sometimes you just have to sit on your hands and just say, all right, I'm just going to continue continue watching price until it makes some form of proper move. So we started off our morning with an SMT divergence. So SMT just stands for, so let me see if I can write it. So SMT starts with smart money sinking, or smart money thoughts, or just smart money. It's a smart money concept. So it's an SMT divergence. So a divergence is just basically like a cracking correlation. So these pairs, both US 500 and US 100, are very correlated. So when one is making a higher low, the other one is making a higher low. If one man making a lower low, the other one is making a lower low. So they're just moving basically at the same wavelength. Alright? But at this time, at this period from 6:45 to around 8:45, and I look at this again, 6:45 to 8:45, realize that we had a little difference. So although we had the sales in the morning, realize that on the Nasdaq we made a higher low, which is right here, while on the S&P 500 we made a lower low. So that's the divergence or the cracking correlation. So S&P 500 went a little bit lower, while the Nasdaq or the US 500 went a little bit higher at the same time. Alright, so that's just the start of the morning. So let's look back. I'm going to use the replay tool to kind of show you what happened this morning. Alright, see if I can maximize this without the tool in the layout. Alright. Right. I'm on the 50-minute time frame. I'm gonna go a little bit low so you guys can see what was happening this morning. Right. So this is approaching New York open. Our New York Hill zone is around 9:30. Alright, so 9:30. Realize that we took out this buy stop right here because I know a lot of persons after seeing price stay at this level, went down a little bit, then come up back down here and all of that, and then now realize that it went up back a little bit and came back down. A lot of persons who have been putting their buy stops, or you can call it a stop loss, right above this candlestick, right? So I'm at that level because that was an area of liquidity I think it would touch, and as you realize, it just went up right after it. It went up right after it, right? So And then now this red box that you see me draw over here, if you are look back at the 50 minute, I labeled it as a breaker, but when I was in ICT's recording session this morning, as I was listening to him in the New York morning session for the entire session, but I didn't fully understand the mitigation block that he talked about. So I'm going to have to look into it a little bit more. A mitigation block, as he said, it's almost like a breaker block, but a little bit different. So I don't fully understand it yet, but I'm just gonna call it this a breaker block for now. So I realize I'm trying to stop my breaker block. Alright. We have some strong displacement coming down. Let's see. Let's try see if I can go down to maybe like 3 minutes. This is what happens. Oh, sorry. So price is just moving up and down, up and down, up and down. Just up and down, just up and down. I usually have morning session like this at London. Well, not morning, a London, not a London session, a New York session. Usually we have price moving a lot more, with a lot more displacement, I would say. Like it's moving strong. So right after we reach 9:30, it's either going straight up or straight down. It's not moving like this right here. But we just have this up and down movement, up and down movement. Right? Let's continue to watch. So I think we went off into New York lunch soon. So realize the price came back down again, then went up back again, came back down again, went up back again. Alright. So where you see this green, what would I call it? Maybe like a green rectangle, this green area stops. That's where my New York session or morning session ends. So I work it from around 9:30 to 12 p.m. So my kill zone is usually starts at 9:30, but when I'm looking for buy stops and sell stop levels on 50 minutes, I usually work it before the 8:30 region. So 8:30 would be around here. So I would look for major highs and major lows to mark up. The only major low I got was this one right here. And even if I try to zoom in right down here, I wouldn't even get an entry because although price broke this little swing high, I don't have a fair value gap to enter, so I wouldn't even try to trade it all the way come off here. I would just sit on my hands and just wait. Right? So realize that we're in what? New York lunch. And I would not recommend to anyone to try to trade this hour. It's not really a very profitable hour for me. Maybe you can try it and it works for you, but I learned from ICT himself that don't try to trade the New York lunch hour. You always say stay away from it, wait until after one, maybe roughly 1:30, and then you start to look for entries back again. Wait until that 12 to 1 hour is finished. Alright, so I'm gonna go back to our 15 minute. Alright, so before New York lunch, I had marked this level, this sell stop. So basically, when persons saw this pricing coming up, a lot of persons saw price came back down, and then now some persons like who have the resistance or support mindset might be, all right, if I drew a rectangle here, and then now I see price touch it maybe like 2 or 3 times, I know it's just gonna go straight up, but I wanted to attack this level, this sales stance, because I know some persons, even though they didn't see come back down to this level, they would have maybe tried to put maybe like stop losses or entries on this level, so it would be a level of high liquidity for me. I don't know if I explained it right. I don't think so, but it's my first market review as I see. Alright, so let's see what happens. So this was the New York lunch. I realized that in the New York lunch we just had sun prices coming down. The price attack it. Let's see. Wanna kinda limit down the updates time. So price broke right here. Our price took out the sales stop right here. Alright, so this was what I was talking about. So some persons might look at this level as maybe like a support or a resistance level. So that's what I meant to say. I'm sorry about that. Some people might put it to the candlesticks. Some people might just work with the body of the candles like these. And then they'll say, alright, they're going to put their stop loss very low, this low. So after they have realized that price went up all the way here like this and see coming back down a little bit, maybe try and enter right off of this kind of say price came up a little bit, came close to their level, came up a little bit. So a lot of persons maybe have been saying, oh, give me the two touch and all of that, or whatever they want to call, whatever pattern. So I know price is gonna go straight up, and then you just see price, bam, take it out, isn't that? And then no price. I can tell that price went up after that, but it just took out their different little stop losses at their different levels first before doing all of that. So let me jump down to the 1 minute. So this is what I do. After I realize that price I've taken out a level that I wanted, I usually go to the smaller time frames. Most of the 5 to 1 minute. So 5, 4, 3, 2, 1, all the way down. I just went to the 1 minute right here because I know what happened on the 1 minute. So this, alright. So this red zone you see coming up here now. We have just entered the New York afternoon session. So 1 p.m. I work it from 1 p.m. to 4 p.m. And then now we have the lunch hour macro or the final hour macro, which is from around 3 to 4. And then now after 4, I don't want to stay in a trade. I just usually work between the hours 9 to 4. This one I was a little bit guilty of holding it a little bit longer because I wanted price to go to a certain level. And I was expecting it to go. I don't know if I would stay in it if I had a live account on it. Alright, so let's see what prices. So alright, so this was a break of market structure for me. Alright, so why I say that is because we had sales stops right here. Price came down, plummeted those sales stops, took them out, and then now price made a small swing up here. And then now suddenly we had this one candlestick that took it out suddenly. It wasn't like maybe and that's not gonna work. No, that's not gonna work. I should have had part on this. I had part. Let me just try to make some into rectangles. Alright. Okay. Okay, this one. I really do apologize for this halt right now, guys. Alright, so as I was saying, you notice that we just had this huge candlestick come all the way up like that, rather than just trees run like this. And little static run maybe like a little candlestick going up, a little candlestick going up, and maybe just tapping that a little bit. No, this one was a strong candlestick. So instead of having like maybe one small candle like this just taking out that BMS or that breakout market structure, I wouldn't want to enter off that. I wouldn't want to enter just have something like this. Alright, so let's see what happened that time. Alright, so this is what we get now. A ICT fair value gap. When we have our candlesticks that are traded with a lot of displacement, then the next candlestick that comes after it closes above it and creates a space between the previous one before and the no new one. So this space is what you call the fair value gap. I will leave a proper statement in the description when I'm done. Or link to the video that I use to really understand fair value gaps. So I will try to enter as soon as price touch this level, and my stop loss would be either at the low of the fair value gap, so below here, or below this pricing right here. Alright. Alright, so we realize that just after a minute, price just came back in and tapped us. So my long position. So as I said, price, I would just want price to step into that fair value gap. And I said my stop loss could be either below the low of this candle or the low of this pricing. So right here would be roughly good. And then now, to what level would I trade? Alright, that's cool. I learned this new thing, this new fib retracement tool that I've been using for the past couple weeks now. How to predetermine certain levels. So you realize that I use the fib tool and I just take it off the pricing previous high, the previous low, and my 50%, which is mostly my discount price or my equivalent price. So I would have premium then discount. And then now I have levels. So I have negative 0.5, negative 1, negative 1.5, negative 2, negative 2.5, all the way coming up to negative 10. If it's in a very trendy market, price can trade up to the negative 10. It's very possible in these type of markets. That's why I really love futures. So let me open my stop a little bit, give it a little room for error. Don't make it too tight, because no one's strategy is 100% foolproof. So let me show you me entering positions before I supposed to. And if you want to know how much I would be risking, we can just watch it when price reaches I think 1.5. Alright, so we'd be risking a little bit less than $100. As one, 0 to -0.5 to 1.5 is the same thing as is 0 to 1 point, well, 0 to, not 0 to 1, yeah, sorry, right? So this will be my entry right there. So see what price does after that. Would I look re-entries? Sorry, I don't think I would have the time. You see, from long I entered this trade and because I had class I want. If I was had gone to enter this, I wouldn't really look for re-entries. I would just make sure that my stop loss is in a good position and that I didn't enter with too much, so I wouldn't have to be thinking about too much as well. As I said, I wanted price to trade up to the 3,900. No, 3,900, yes. Alright, so let's speed this up a little. Once you tired of hearing me speed now. Let's see what prices. As the price came all the way up to our 9 region. I would set alerts to all of these different regions, so most of it to the 5. After I see price taking out this pricing, which is around the 5 level, yeah, 5.5. I would really want to see that. Maybe I would have taken it out there, so maybe not. I don't know if you heard me out, like I stood a little bit forward. I said I would want price, I would set a major alert for 5.5 or negative 5.5 right here. It's around the same level as this high stop right here, or this all-time high, or what I would mark as a buy stop. So really, it's price is around one between I call it around the negative 7.5 region. I wanted it to go to negative 10, so let's see if it would go and how much it would earn. Okay, and so see price jumping all the way back down. Alright, so I may display it out a little bit too long. I would have exited right at the 4 o'clock region. I wouldn't try to hold it any longer. So I'm sorry about that. I'm just not gonna have to do this over again because I just want to really show you how much I would really earn. Wrong place, man. Right, back to one. So one thing about this replay too, you kind of going back, you have to make sure to put in my position. It's kind of tiresome. That's how I end up with 25 lad. And so I said I'll be come up to 4 o'clock, so let me make sure to watch out for 4 o'clock. I reach close to around 3:30, I'll just slow it down. So this is me right here now. Okay, 49. Slow it down now. That's 3:49. Well, not 3:59. I'll just close it right there. So if I close it right there, we'll just make a note. Yeah, I can just close it right there. I don't need to trade it all the way up to the level right there and show you the profit. It's $1,200 already. That's any more than enough. Close my position right there. Went up a little bit more, but such is life. Could have went down a little bit less. That's just one thing I'd recommend to anyone. If you're trading, just always stick to your rules. Don't always say that, oh, suppose I had went up here, imagine how much I would have earned and all of that. Kind of look at it on both sides. Suppose that went down, back, and all of that. Sometimes it's get better to get some profits than no profits, or a little less profits. Right. No, I don't know. I'm finishing all this. Oh, I just wanted to show you that price came and attacked that 3,900 region. Alright, so we had our first attack here. Coming all the way up back. Right. So that would be my market review. Finish off. So that would be my market review. As I said, finishing off. So 1202.50 USD. Right. And if, as I live in Jamaica, we have a foreign exchange rate, and the US dollar is worth a lot more than the Jamaican dollar. So if I add that, I would be looking at, oh shoot, roughly 180,000, roughly 183,000 dollars. It's very good, especially as a university student. Alright, so that concludes this video. I hope that it was helpful to someone. It was hard to really say that I wanted to try to do this, but I enjoyed really talking and letting everything out and say, alright, this was a market review and all of that. So if you like this type of video, please give it a like and a comment. And if you would like to learn something more, just say it in the comments. Alright. Thanks for watching. Until I see you next time. Be safe.